In today's dynamic environment, SKOR provides individual and institutional investors with a way to access high credit quality in intermediate investment grade securities while at the same time managing liquidity risk in a portfolio. One of the interesting observations we see is the significant flows that have come into fixed income ETFs. If you look at the overall market environment, there are both structural changes in the market and changes in investor demand that are really driving it. We've seen a persistent low interest rate environment, so investors are challenged to find the level of income that they would like. But we also see that certain indicators that we've looked at, like credit ratings, have been more lagging indicators. This has created an excellent opportunity to meet some of the demand that we see from investors like, say, retirees who need more income in their portfolio, younger investors who want to offset some of the risk in their portfolio, or even institutions that have to meet liabilities like they're solving for a pension plan need down the road. Those are the things that have come together to create an environment where we can definitely utilize corporate securities or corporate fixed income securities built into a thoughtfully designed portfolio, as we've done with SKOR, to meet the needs of investors. One of the reasons that we focused on the corporate segment of the marketplace is that you have a lot of issuance of securities where they're fixed income securities, but they provide for you enhanced income or yield, say relative to something like a U.S. Treasury. Bonds tend to be less liquid. And so there are two things that we've thought about with respect to our credit scored product. One was to provide a product that does a good job allowing investors just to consider the credit quality of an investment. And then two is to provide investors with a nice liquid investment vehicle such that they can trade it effectively in their portfolio. SKOR scores on both of these characteristics in that we have a proprietary scoring approach that is more of a leading indicator and focuses on certain factors like management efficiency or profitability or the solvency of a company, so people can have confidence that they're invested in a good portfolio of securities. But what it also does, it has simple rules that speak to the size of issuance or the nature of trading in the underlying issues or securities, so that we know that we have liquid investments in the portfolio.